Hello everyone. So today we are going to start with chapter 3 quiz and then practice questions. If you do like my videos, then subscribe to my channel in order to get the notification of the latest video being uploaded. Okay, so let's start with chapter 3 quiz. Okay, question 1. Dominic purchased a residential property to let out on 30th June 2024. The property was let for the first time on 1st September 2024. 1st September 2024 with a rent of £9,000 per annum being paid quarterly in advance. Okay. Interest and related finance costs on a loan for the property amounted to £2,000 during the tax year 24-25. This is a residential property. Dominic incurred the following expenses related to the property. There was insurance expenditure paid on July 2024 for the period 1st July to 30th June and paid on August 2024 for new furniture for £3,000. What is Dominic's property income assessable in the tax year 24-25? Okay. So Dominic purchased a residential property on 30th June, but it was let from 1st September. And the rent is 9,000 per annum, but it is being paid quarterly in advance. So if nothing is provided in the question, you will always use cash basis. Okay. So if I talk in terms of cash basis, the rent is being received on a quarterly basis in advance. Okay, early in advance. So let's say for example, quarter September, October, November. Then next quarter will be, can I say December, Jan, Feb, and next quarter will be, can I say March, April, May, right? So for since the property was let for the first time from 1st September, so for September, October, November, this 3 quarter, the rent of 9,000 into 3 by 12, that will be nothing but 9,000 into 3 by 12, that is 2,250. So this is the amount of rent which is supposed to be received on quarterly basis. And can I say for September, October, November, it would have been received on 1st September 2024. Then next it would have been received for next quarter, that is December, Jan, Feb, must have been received on 1st December 2024. And for March, April, May, it will be 1st of March 2025. For next quarter, that is March, April, May, June, July, August. June, July, August must have been received on 1st June 2025. Now this falls in next tax year. Okay, tax year 24-25 ends on 5th of April 2025, right? So this is not received in current tax year. So this is not our topic of concern. Our topic of concern are these three receipts of 2250 each received in every quarter. Okay, so 2250 into 3, that makes it, can I say 6750? So 6750 is my rent received. Okay. Now, other than rent, I have paid interest and related finance cost on loan for a property amounted to 2000. Okay. So my interest and finance expenditure is 2000. But since this is a residential property, if it would have been a non-residential property, I would have deducted this 2000 because this 2000 would have been allowable. But since this is a residential property, can I say on this 2000 I will be getting basic rate tax relief from my income tax liability. So basic rate is, can I say 20%? So 2000 into 20%, that is 400. This 400 will be deducted from my income tax liability. Okay. So in my property income assessment, there won't be any impact of this finance cost since this is a residential property. Okay, so I will simply ignore this as I need to compute the property income. Next, there are other expenses too. See, it does not matter what period it pertains to since I'm doing cash basis. If it would have been accrual basis, then I would have considered this period. Since I'm doing cash basis, I will consider the period in which payment is being made. That is July 2024. No, I mean date on which the payment is being made. And can I say July 2024 pertains to tax year 24-25? Right, I mean falls within tax year 24-25. So this expense of 900 is something which is allowable. So I will deduct this 900 from my property income, or I would say my rental income. Other than this, in August 2024, which also falls in tax year 24-25, but I purchased a new furniture. Now can I say this is a kind of, you can say, domestic item. Okay, now this would be used by the tenant. On this, I do get domestic items, or I would say replacement of domestic items relief. Okay, but as the word says, it is on replacement. This is a new furniture. Okay, I am not replacing it. I am buying it for the first time. So if I am buying it for the first time, no deduction will be received. However, if in future I replace this furniture with a new furniture, then in that case I will be eligible for replacement domestic item relief. Okay, so even this will be ignored. So my property income for tax year 24-25, I mean Dominic's property income for tax year 24-25 will be 6750 less 900, that is 5850. That is nothing but your option C. I hope this is clear. Moving ahead. Question 2. Parvati. Parvati owns a residential property that she lets out at an annual rent of £15,000. Okay. Rent is payable monthly in advance. However, only 11,250 was received during the tax year 24-25, as tenant didn't pay rent for Jan to March 2025 until 30th April 2025. Okay. So he did pay rent, but the rent was received on 30th April 2025 instead of advance. Okay. Parvati has the following expenses related to the property in August 2024 and in May 2025: replacement wardrobe and decorating. Parvati has elected to use accruals basis. See, the question has specifically written to use accruals basis, so I will use accruals basis. What is Parvati's property income accessible in the tax year 24-25? Okay, so I need to compute. So my rent, can I say rent for the year? Rent for the year is, can I say 15,000 on accruals basis. See, on cash basis, I have received 11,250 in this tax year, and other remaining amount in the tax year 24-25. But since Parvati has made an election to do it on accruals basis, can I say whole 15,000 is accrued, right? And I have received the rent. If the tenant wouldn't have paid me at all, then I would have got some, I would say, impairment relief. Okay, in case my tenant ran away or tenant was absconding and not paying me rent. Okay, but I have received my rent, not in this year, but in the next year. So accruals basis point of view, whole 15,000 is being accrued. So my rent is 15,000. Now when I talk about expenses, Parvati has the following expenses related to the property. Now here I won't be looking at the payment date because this is not cash basis, this is accrual basis. So Parvati purchase a replacement wardrobe. Now see, this is a replacement, right? So I will be eligible for replacement domestic item relief, right? And previous wardrobe was sold for 100. So new wardrobe has been replaced for 1000 and previous wardrobe was sold for 100. So can I say my replacement cost is 1000 less, can I say, I would say scrap value, or maybe the value at which previous wardrobe was sold is 900. So ideally my net replacement cost is, can I say, 900 only. So 900 would be allowed as a deduction as replacement domestic item relief. Okay. Okay, other than that, I have incurred Parvati had incurred some decorating expenses, and the work was completed in March 2025 itself. Can I say this pertains to tax year 24-25 on accrual basis? Cash basis, cash payment was made in May 2025, but is it irrelevant? So can I say accruals basis point of view, this has been accrued expense, right? So if this expense is accrued, I will be deducting it as decoration expense. So my, or I would say Parvati's property income accessible for tax year will be 15,000 less 900 pounds less 500 pounds. That makes it 13,600 pounds. That is your option B. So I will click option B. Okay, moving ahead to question 3. Miss Abeb granted a 30-year lease to Mr. Holmes on 1st September 2024 for a premium of 30,000 pounds. Miss Abeb has elected to use the accruals basis. Now, since this is a premium, okay, it does not matter whether you are using cash basis or accrual basis, the computation would remain the same, and the amount, I would say, same amount would be taxable in that particular tax year of receipt itself. So, can I say Miss Abib has received 30,000 of premium. So how would I compute the taxable amount of premium? That is 30,000 into 51 less 30 years divided by 50. Okay. In this, only this 30 and 30,000 is the, I would say, amount to be inputted. Rest is your same formula. So 51 less 30 divided by 50 into 30,000. That makes it, and I say 12,600. That is nothing but option D. Okay. Mm, yeah. Moving ahead, Ben rents out a furnished room in his main home at an annual rent of 7,900. His expenses for the room are 300. What is Ben's assessable property income in the tax year 24-25, assuming he makes any beneficial claims? Now see, if I go for normal computation, it will be 7,900 less 300. That makes it 7,600 being his property income. But can I say he has rented out a furnished room from his main residence or main home? Then in that case, Ben is eligible for rent a room relief. In rent a room relief, this seventh out of this 7,900, 7,500 of income would be exempt. Okay, so this 7,500 of income would be exempt and only 400 would be taxable. Of course, I will ignore the actual expenses in this case. So only 400 would be taxable. That is nothing but option C. See, if I'm claiming for rent a room relief, I cannot claim for expenses. If I'm claiming for this exemption of my income, I cannot claim expenses as such. Okay, so we need to decide in exams whichever is beneficial, the normal computation versus your rent a room relief claim. Okay, moving on to question 5. Alicia owns three properties in the UK which are let out and qualify as FHA, that is furnished holiday accommodation. Alicia's assessable income and allowable expenses for the three properties for the tax year 24-25 were as follows. There is property 1, property 2, and property 3. Okay, all of them are FHA. All of them qualify for FHA. And here are your incomes and here are your expenses. So what I will do, I will simply compute net profit or loss situation. So 2,400 less 2,900, that makes it, can I say, negative 500, or I would be writing negative 500. Okay, and this will be, can I say, 1,800 less 1,150. That makes it, these are my expenses, no? So I'm deducting them. Okay. So 1,800 less 1,150, that makes it 650 profit. Okay, this is, here I'm computing profit or loss. Okay, and 2,600 less 2,000, that's simple, that is 600. So my net position is, can I say, 750, right? My net position is that I am having 750 of profit. Okay, here loss and here too are profit. Other than that, it says that Alicia has brought forward losses of 700 from FHA. Okay, previous FHA year. So can I say I can use this to set off against my current year's FHA profits? FHA losses can only be used against FHA profits only. Huh? So don't use it against any other property income. So ideally, my property income for this tax year, that is 24-25, or Alicia's property income for tax year 24-25 is nothing but 50, right? So that is option A. So that ends your quiz. Uh, so that ends your quiz. Now let's move to practice question for chapter 3. Okay, property and investment income. Okay. So question number 1 says Luke acquired a residential property that he first let out unfurnished on 1st August 2024 for an annual rent of £12,000 payable quarterly in advance. Expenditure for the period from 1st August 2024 to 5th April 2024 was as follows. Okay. Mm, there was some building insurance, minor repairs to doors and windows, improvements to the property. Okay, we will discuss this. Advertising for tenants and council tax. That is 1,600. Okay, what is Luke's property income for the tax year 24-25? Now, can I say Luke acquired a residential property that he first let out unfurnished on 1st August. So, rent is payable quarterly in advance. So, August, September, October, November, December, January, February, March, April, and then May, June, July. Right. So, for August, September, October quarter, the rent is payable on 1st August 2024. That will be nothing but £3,000. Then for November, December, Jan, it would be payable on 1st November 2024. That is again £3,000. Then for Feb, March, and April, it will be can I say 1st Feb 2024. That is again £3,000. And for May, June, July, it will be 1st May, sorry, 2025 here. 1st May 2025. But can I say this falls in the tax year 25-26? So I will not consider this because I have no information if Luke has specifically made an election to use accruals basis. So I have no information, so I will simply use cash basis. So on cash basis, my rent is 9,000. I mean, my rental income is 9,000. So talking about expenses, can I say 650 is something allowable? So I will deduct this. 1150 is again allowable. So I will also deduct this. Improvements. Can I say this is not a expenditure, or I would say recurring or revenue expenditure? This is a kind of capital improvement in the property. This would be added in my purchase cost. So when I sell this residential property in future, then in that case, my cost, or I would say my deductions from my disposal proceeds would be the cost of purchase of this residential property and improvements to the property. So this is a kind of capital improvement. So this will not be deducted from here. So I'm simply writing zero. Other than that, there are advertisement expense and council tax. So that is 220 and 1600. So that makes it around 9,000 less 650 less 1150 less 220 less 1600. So that is 5850. So, okay, there is some mistake in my computation, I guess. 9,000 less 650 less 1150 less 220 less 1600. That makes it 5380. Okay, my bad. 5380. Okay. Mm, yeah. Moving ahead. Question 2. Gloria lets out two furnished properties to holiday makers. Both properties are available for letting for over 210, 210 days each year. Property A was actually let for a total of 140 days. All lettings were on weekly basis except one letting which was from 1st July to 14th August. Okay. And property B was actually let for 110 days on weekly basis. It was unoccupied for the rest of the time. Okay. Now, can I say in this, okay, what do we need to identify? Let's see first that. Identify by clicking on the relevant boxes below whether each property qualifies as FHA or not. Now, for FHA, 210 days is available, so this condition is satisfied. Another condition is, can I say, on an average, there should be 105 days for both the property. On an average, it should be actually let for 105 days excluding the period of long-term occupation. Now, what is long-term occupation? If any one person has occupied the property for more than 31 consecutive days, then in that case it will be considered as long-term occupation. So can I say here it is a long-term occupation in property A, that is from 1st July to 14th August. So 1st July, in July there are 31 days, right? 31, and in August there are 14 days. So 31 plus 14, that makes it 45. So out of 140, I will reduce 45 days. So that makes it 95. Okay. So ideally, a property A was only let for 95 days and property B was let for 110 days. So if I go for averaging it, 110 plus 95 divided by 2. What is the answer? Divided by 2, that is 102. Okay, so can I say on an even on average basis, it is not 105. So property A would not be in a position to qualify for FHA. However, property B would definitely qualify for being an FHA. So I will write it here. No and yes. Confirm. Continue. Okay. Question 3. Paul invested 6,000 in ISA, stocks and shares ISA in Jan 2025. How much more can Paul invest in cash ISA for the tax year 24-25? Now, when I talk about tax year 24-25, every individual is eligible to invest up to 20,000 pounds in a tax year. That is, in this tax year. Now, this can be in any combination, whether you invest in stocks and shares, whether you want to invest 100% in cash ISA, or whether you want to invest combination, whatever percentage, it's perfectly fine. Okay, so here can I say my correct answer would be 20,000 less 6,000, which is already being invested by Paul. So if I reduce the 6,000, that makes it 14,000 pounds. So that is option D. So my correct answer is option D. Confirm and continue. Okay, question 4. What does question 4 say? Since 6th April 2024, Nicholas has let out an unfurnished freehold office building. On that date, the tenant paid Nicholas a premium of 82,000 for the grant of 15-year-old lease. How much of premium of 82,000 should Nicholas include when calculating his property income for the tax year 24-25? Now, obviously, he has received 82,000, but can I say whole of 82,000 won't be taxable? Since this is a short-term lease, or I would say short lease, I need to compute what would be the amount of premium that would be taxable. So I will simply multiply premium with this formula, that is 51 less the period for which, or I would say the period of short lease. So my premium amount is 82,000 into 51 less n, that is 15 years. That is the period of short lease. That is 15 years divided by 50 years. So that makes it around, if I multiply this, figure is 59,040, sorry, 040. So that is your option, first one, right? 59,040. So confirm and continue. Okay, question 5. Rackman's only source of taxable income in his property business consisting of unfurnished residential lettings. His profit for the tax year 24-25 was 99,500. This does not include interest expenses of 24,000. How much income tax is payable by Rackman under self-assessment for the tax year 24-25? Okay. Uh, his only source of taxable income is property business consisting of unfurnished residential lettings. His profit for the year is 99,500. This does not include interest expense. Now, when I talk about interest expense for residential property, can I say this would be on this? I would be getting basic rate tax relief of 20%. So 24,000 into 20% becomes, can I say 4,800? Right? So 4,800 will be deducted from my income tax liability. But for that, I need to compute my income tax liability, and for computing income tax liability, I need my taxable income. Can I say Rackman is having only source of income of trading income of 99,500? So 99,500 will become my trading income, or I would say my total income. And since there are no reliefs, it would become my net income. So I would simply write this as net income. Since my net income is 100 less than 100,000, I would be getting normal PA, since my PA and ANI will be equal to net income, so it is less than 100,000. So I will be getting normal PA of 12,570. So if I reduce this, that makes it around 99,500 less 12,570. That is nothing but 86,930. Okay, this is my taxable income. Now on this taxable income, now on this I need to compute my income tax liability. Okay, so let's compute income tax liability. Can I say, what do you say? Rackman is, can I say, a higher rate taxpayer, right? If we check this. Okay, very bad idea. Check this. Okay, so additional rate, higher rate. Can I say higher rate slab is ranging from 37,700 to, well, 125, 140. So can I say Rackman's income is around 87 something? 86,930. So can I say 86,930 is falling in this band? So it is higher rate. I will move to first page again. Yeah. So first I will tax 37,700 at the rate of 20%. So on as when I talk about basic rate, 37,700 will be taxed at 20%. Okay, so that makes it 7,540. Okay, now if I talk about higher rate, can I say rest of the amount, not all of the amount, remaining of the amount, that is 86,930 less 37,700, which is already taxed. So 37,700 is already taxed. So that makes it 49,230. This will be taxed at 45%, 40%. Sorry, my bad. 40%. So that makes it 19,692. Okay. So what is my liability? Plus 7,540. That is 27,232. Okay. Now in this, I will be getting basic rate income tax relief for interest expense of residential property of 4,800. 4,800 will be reduced. So this is basic rate interest relief. Okay. So that is nothing but if I reduce 4,800, that makes it 22,432. That is option C. Okay, let's continue. So that's it for today from my side. That was your chapter number three, property income and investment income, quizzes and practice questions. If you have any doubts and need doubt solving support for me, you can ping me on Telegram.